Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
In 2024, private equity flows into India kept pace with the momentum seen last year, but it still is not seeing the highs that we saw in some of the earlier years. But there have been some large deals, especially buyout transactions. Mergers and acquisitions were subdued for most part of the year and has seen an uptick largely because of one or two large transactions. Investment bankers expect the momentum to hold and themes such as control deals to continue. Bhavesh Shah, Managing Director and Head Investment Banking at Equirus, expects both PE and M&A deals to pick up as we go into the new year.
What is happening is it's a very nice trend, and in fact even a surprising trend that good amount of private equity money is being raised by the private equity funds. And in hindsight, it's actually not surprising because a lot of the PE funds that is able to get some good exits through IPO. So the LPs are now looking at this asset class as one you can, invest in companies which will potentially go for an IPO maybe 2 years down the line.
Okay.
So they'll be able to catch the companies young and see them grow tight. And to some of the funds that we've been talking to, the amount of money that they have been able to raise is amazing. Now, very, very small funds. They're talking now about 500 crores, 1,000 crores, 2,000 crores. Case in point is Motilal also a private equity fund. I mean, of course, it's a big fund now, but at one point of time, it used to be 300 crore fund. Now, today, they're raising $1 billion, almost like 8,000 crores kind of fund.
Okay.
Which really speaks a lot about the Indian market. That yes, there is a secondary market out there. There's a lot of money coming into secondary market, but how do you get private market? So, Janaki, I personally feel that supply creates demand many times. And in my view, this will be 2025 will be a year where the private equity as a amount of deal making will go up significantly compared to what has happened in the last few years. Last 2-3 years, we've been seeing a decline in the private equity fund trade on the back of funding winter, on the back of companies, or there's always something funny those being raised by the tech and e-commerce companies, and suddenly they all get a more investment companies which will burn and grow, and you want profits. There was a funding winter, and now the funding winter is getting recalibrated, and which is why we saw the decline in the fundraising.
Yeah.
And now I think 2025 is an inflection point and will start going up again.
Yeah. No, it's very interesting. You should say that, that smaller outfits or entities are also able to raise, because we have seen that Blackstone and, some of the larger private PE firms, they are able to raise funds. For instance, Blackstone is raising a fund at the moment, right, about $10 billion. But my impression was that some of the smaller, they are finding it difficult to raise funds from LPs. Is that correct?
Yeah, I wouldn't think so. I make a very specific situation. In fact, I've been having conversations with people who have left some of the funds. And, and these are very young professionals who may have been at the director level or VP level, director level at some of the funds. They're now saying, I've left this fund, I'm starting my own fund. And that first impression is, wow, you're starting a fund. And then the next statement they make is, I'll be able to raise 300 crores, 400 crores. In the next 6 months. So, I'm just in. So now they obviously reach the fund and everything, but you can see things take sudden, but now they give it in the block. They're talking as if they are, the confidence that they have and the ability to raise funds is at a different level. So there is a lot of money coming in. Specific situations will always be there because of track record of, I don't know, whatever it may be.
Yeah.
But And I think the more money we can be there in this space.
Yeah. Do you think that the public markets, which has really run up quite a lot, that is actually spilling over into the private markets, and valuations are getting inflated, and that is why probably we saw that some of these deals did not go through, or they went through after a lot of problems.
No, I agree. I think valuation definitely on the secondary market are one is to really look at whether whether that really makes sense. And it cannot. I mean, I wouldn't want to paint a very general brush on the entire market. It is expensive because and then the some stocks which are very expensive, some stocks which are good enough to and usually that value as well. But what is happening also from a retail investor standpoint, I think they are starting to look at private equity as an option to invest in from a long-term orientation standpoint. And I mean, some of them have made money and they want to diversify the asset class. What we are going through is what maybe US had gone through many years ago.
Right.
So I think we are at that stage where
Right. So, going forward for the new year, what kind of themes do you think would play out so far as private equity is concerned? I mean, do you think, consumer is going to be there? Because consumer, as you saw, a whole lot of deals has taken place. And also in the case of pharma and healthcare, do you think that still will play out?
Yeah. I think consumer, pharma, healthcare, and business services, including financial services, will be some of the things which will continue to attract a lot of capital. And these are the sectors where you have seen a lot of investor interest coming in. But a new dimension to this is also, in my view, going to be somewhere around industrial. Differentiated manufacturing businesses, I think can also start getting some angle of the capital to come in. So, so I think India has been for the last decade or a country which has been going on the business services. Services is not a good part of GDP growth in the last 2-3 decades. The next 2-3 decades could come upon manufacturing. Although growth is happening there, but it's still not as much as how much we would have desire. The manufacturing is still about 16% of the GDP. But the way things are, I think the way the money is spent on infrastructure, the way the money, the global China plus strategy, etc. All of this is playing out. The manufacturing team also will start occupying a huge space in the capital allocation of the investment.
Right. And do you think, last 2 years, I'm sure you would be knowing, private equity firms had some great exits, all of them giving some 3x, 4x, 5x returns. Do you think those kind of returns will still be there? Or do you think that because with FPIs, we don't know the FPIs are going to be still there or not? Is that going to affect their exits?
So, I personally feel returns will be there in Indian market, and getting where the conundrum for the private equity also lies. On one hand, if they are competing with capital markets for the same kind of a fundraise, they have to really aggressively do the pricing for the valuation, and the returns over there maybe not as good as 3x or 5x. It will be more like a return which is it's like a human return. It's a lower risk ratio. But the real return will start coming in there. The companies are not yet scaled up for an IPO, but they need capital. Or some immediate need or some structuring requirement. And if they are able to get a good pricing there, that's where I think they will be able to get a nice return.
All right. Now, coming to the M&A side, we have seen actually very few M&As happening in India, isn't it? I mean, hardly anything. So do you think that activity will pick up?
I think so. I think M&A activity is going to pick up significantly now because the reason it is not happening in India is because a lot of foreign players want to invest in India, but at the same time they're struggling because they themselves in the global market will be trading at some X valuation, and the opportunity in India are available at valuation which is higher. So they tend to struggle on that.
Yeah.
Now, when it comes to domestic companies wanting to do an M&A, there has always been a challenge around research crunch for these companies to do M&A. Now, if some of these companies are, especially the companies which have gone public or are based on public, one of the major things that some of these companies will hire is, can I do acquisitions to kind of consolidate my growth over and above my organic? So I personally feel that the domestic company can add that flavor of consolidation in the Indian market, and which is why the M&A is exciting. And frankly, a lot of companies we have also done in our sector, we kind of run IPOs for companies which are market leaders. So what about the number 4 year, number 5 year, number 6 year? You will neither get a private equity research or you will neither get a public market interest.
Right.
What happens to him? So the best thing for him is to align the number 1, merge it or sell it or be a part of that story. Rather than the number 1 that now also has capital back.